Hello, I'm Ben from ModernGraham, and today I wanted to go through a quarterly review of the S&P 500 based on the ModernGraham analysis. And so what we have here is the S&P 500 report, which is available on my Patreon for Patreon members as well as for individual purchase. But what you can see here is the summary page, and we have for September the current price as of the date that I made the report. Now, this was a few days ago, so that price has changed a little bit, but it was 5,740.76. And the average PEMG, which is the price over the earnings per share ModernGraham, which is a weighted average of the last 5 years of earnings for the companies, the average PEMG was 30.2, which is pretty high. And the average percent of ModernGraham value when you exclude any that were over 200%. So sometimes the ModernGraham value formula gives results that are way above where you would think it would be, or the price would be way over what it actually is what I mean. And so the ModernGraham value is super low, and that doesn't always make a lot of sense. You would think the market and ModernGraham and the intrinsic value of the companies would be a little bit closer. And so it can be useful to exclude some of those outliers. But either way, with the 200% outliers excluded and the 500% outliers, we still have pretty high average of ModernGraham values. So the prices right now are pretty high on the S&P 500. I think that is probably something that is, a lot of people are saying, and I agree with them. I think the S&P 500 is pretty high right now. It would not surprise me at all to see a correction come back and to get some of those prices back in line. Now, here we can break down things by companies that are found to be suitable for the defensive investor, which is somebody who is not willing to do a ton of research into each company. And so they have really strict requirements. Then an additional 32 companies are suitable for enterprising investors who are willing to do additional research into companies. So their requirements are a little bit less stringent. And then 410, which do not fit either type there. And so that is interesting to see how many are not suitable. And then we have undervalued, fairly valued, or overvalued. And this really splits it out according to where they fall. Of these 59 suitable for defensive investors, 33 are undervalued, 12 are fairly valued, and 14 are suitable but still overvalued by the formula. And then you can see the total is down here as well. And all of these numbers are pretty close to what we would expect normally. Now, down here is a breakdown by the ModernGraham grade. A+ would be a really great score of many different factors on the balance sheet and the income statement, and we don't have any on the S&P 500 right now that meet that A+ grade. And you can see all of the other grades. You can see it increases as you go down because it is hard to achieve those higher grades. Now, here we've got a quick look at the detail that you can see if you go and you buy this report. For all 500 companies, you can get the most recent date that I have put them through the ModernGraham formula, the investor type, either D, E, or S, depending defensive, enterprising, or speculative, complete rating, which is the investor type, combined with the value rating of either overvalued, O, fairly valued, F, or undervalued, U. And so that can make it easy for filtering the ModernGraham grade, then the value that is found for that company, the recent price as of the date that the report was pulled, then the price as a percent of the value, the PEMG ratio, the dividend yield on it, the net current asset value, the Graham number, which is a formula that takes Benjamin Graham's requirements and turns it into a formula, the years of dividend growth, and the current dividend. So that can be a very useful report for you. Now let's take a look at the S&P 500 chart. Now we're actually looking at the chart for SPY, the Spider ETF, SPY. And I like to use that because I actually invest in SPY as one of my investing techniques. And what I have done here is you can see this is the current high, is that level, the all-time high. And down here is the last trough in the swing. We're 65% above that trough. And what I do is I take some of that, and that kind of helps me determine how much of my portfolio will go into equities and how much will go into bonds. And right now, I think I'm at about 67% in equities. And as this goes up every 5% above that trough, I reduce the amount in the equities. And so that's one thing I do. And then this yellow one is a correction. And we have not been in a correction because this little dip that goes down actually was from here, and the 10% mark was about here. So as the high gets up higher, we move that up higher. And if it goes into a correction, that just changes the amount that I put into equities. If it falls down far enough, then that will get that amount in the equities up higher. And I found that that has been really useful for a long-term back testing and seeing how to beat the market long-term. But anyway, the S&P 500, it is very close to an all-time high. This is a Fibonacci sequence here on the, I don't remember exactly what they're called, but it's a Fibonacci thing based on the trend from here up to here. And once it gets past one, I'll create a new one. But you can see it hits resistance right now at each of these levels. It made its way up and then came back down and tested that before making its way back up higher. And then it hit this one and it came back down and it hit resistance there and it there came back up. And that's just making these numbers be even stronger. So like here, it hit resistance again there. And then it came back down and made its way back up. And now we're hitting resistance as it comes here and it fights that high. So if it comes back below this figure, which is 565, then it will probably make its way all the way down to 551. If it doesn't break through that, then it will probably put a lot of pressure on that high and continue to push upwards on that. So those are things to look for. That is all of my update here. But thanks for watching, and I will catch you next time. Take care.